My basic knowledge about 1031 is pushing my tax obligation on the capital gain down the road, right? So let's say I keep doing 1031 exchanges, right? Will it ever catch up to me when I decide to sell or when I decide to pass on that wealth to kids, my great grandkids, and stuff like that, right? And I guess I'm trying to lean into the legacy piece of this conversation. Can you educate us on that?
Yeah, absolutely. Here's what a lifetime would look like. Remember, we said as long as you continue to 1031, you never pay the tax. So
Right,
you start out with your first property and you start using the deferred tax every time you sell, increase your returns.
right.
You use it throughout your life, you use it throughout any part of the real estate cycle, and you finally retire. And remember, we talked about how you can transition into retirement so
Correct.
you're still living tax free.
Right.
And then finally, you die. And that is, I like to think, the second best way of eliminating the tax. It can't be my favorite because, well, but we're all going there, Patrick.
Right.
So let's discuss it. When you die, your heirs will inherit your real estate as
Right.
if they paid market value for it on the day you died. In other words, they get
Yeah.
what is called in accountant speak a step up in basis. So if
Okay.
I buy a property for $100,000 and I sell it the next day for $100,000, how
Mm-hmm.
much did I profit?
Zero.
So there's no tax.
Mm-hmm.
Your heirs inherit your property as if they paid exactly what it's worth on the day you died. In other words, then you keep deferring and then you die for or the four D's of 1031 investing.